Let's discuss now what is the 0% interest balance transfer. This benefit is usually only available during a promotional period for good credit scores. But let's see some interesting benefits for fair and lower credit scores. So, let me check. What is a 0% interest balance transfer? A 0% interest balance transfer is a promotional offer from a credit card issuer that allows you to move an existing debt, usually from another credit card, to the new card without paying interest on the transferred balance for a specified introductory period, often 6 to 21 months. This period lets you focus on paying off the debt's principal without the burden of monthly interest charges. When you do the transfer balance, you better be super aggressive during the promotional period on paying off the debt as fast as you can and not create any new debt, which is always the danger. Change the behavior against this enemy called debt. Key points to understand. Promotional period. This lasts for a set number of months. During this time, you pay 0 interest on the transferred balance. This is the period where you must aggressively pay the debt. Post-promo APR. Once the introductory period ends, any remaining balance will be subject to the card's normal interest rate, which can be significantly higher. At this moment, you should have paid all the debt, or a substantial part. Balance transfer fee. Many 0% balance transfer offers charge a one-time fee of 3 to 5% of the transferred amount. So do the math to ensure the deal remains cost-effective. In most cases, this balance transfer fee is the benefit of the bank or financial institution, so it cannot be avoided. 2. The role of your current credit score. Your credit score heavily influences not only the approval odds for a 0% interest balance transfer offer, but also the specific terms you'll receive, such as how long the 0% period lasts or the credit limit you're granted. Excellent credit 720 plus FICO score. Easiest path to approval for the longest 0% introductory offers. May qualify for higher credit limits, helping you transfer larger balances. Good credit, 680 to 719 FICO score. Reasonable chance of qualifying, though with shorter intro periods. Potentially lower credit limits. Fair or poor credit, below 680 FICO score. Limited access to true 0% offers. Might see low interest rather than no interest deals. Promotions, if available, often have stricter terms and possibly higher transfer fees. Generally, I do not see 0% interest offers for this credit score range. Who actually gets 0%? Realistically, 0% interest balance transfer promotions are generally reserved for applicants with good to excellent credit. If your credit is below the mid-600s, you may have difficulty securing any 0% APR deal. Or if you do, the promotional term might be very short. Third, advantages of a 0% interest balance transfer. Interest savings. The absence of interest charges means every penny you pay goes toward the principal, helping you chip away at debt much faster. Debt consolidation, transferring multiple balances to one card streamlines your repayments into a single monthly bill, reducing the likelihood of missed or late payments. Credit utilization boost. If you keep old cards open and don't run up new balances on them, you can improve your overall credit utilization ratio, an important factor in credit scoring. Potential credit score improvement, reduced balances, and on-time payments can lead to score increases over time. 4. How to apply for a balance transfer. Check your credit score. Obtain your credit report and score to gauge your approval odds. You can get a free credit report from each of the major bureaus at annualcreditreport.com in the United States. Compare offers, look at multiple credit card issuers, noting length of intro APR period, balance transfer fee, post-promo APR, credit limit range. Submit an application. Prepare personal information, address, income, existing debts. The issuer will do a hard credit inquiry, which might temporarily lower your score by a few points. Initiate the transfer. Once approved, contact the new card issuer or use their online portal to move over the balances from your old cards. Transfers can take a week or more to complete. Continue making payments on your old accounts until the transfer officially goes through. 5. Fees and other costs to watch out for. Balance transfer fee, 3 to 5%. The most common charge. For instance, transferring $5,000 with a 3% fee costs $150 upfront. Annual fee. Some 0% cards come with annual fees, though many competitive offers do not. Late payment fee. Missing a payment can terminate the promotional rate, causing the interest to skyrocket to the standard APR. Penalty APR. If you're late or default, you could be stuck with a penalty APR, often higher than the standard interest rate. 6. How to maximize the 0% promotional period. Set a repayment timeline. Determine how much you need to pay each month to clear or significantly reduce the debt before the 0% period ends. Example: if you have a 12-month 0% offer on a $4,800 balance, paying $400 monthly would clear the entire balance in time. Avoid new purchases. Stick to using the balance transfer card only for its intended purpose. Debt repayment. New purchases can offset the benefits of transferring and may accrue interest differently depending on the card's terms. Automate payments. Set up autopay to ensure you never miss a payment. Late or missed payments could void the promotional rate. Monitor the intro period end date. Keep track of when the promotional period expires. As you near that date, any remaining balance will soon see higher interest charges if not paid off. 7. Potential pitfalls and how to avoid them. Overborrowing, increasing debt. Seeing a large available credit line at 0% can tempt some people into overspending. Stick to the plan of debt repayment. Ignoring the fine print. Always read the credit card agreement. Some cards have separate APRs for purchases versus balance transfers, or even multiple promotional periods. Failing to account for the transfer fee, even at 3%, a fee on a large balance can be expensive. Weigh that cost against what you'd save in interest. Card denial or low limit. There's no guarantee you'll be approved for a credit limit high enough to cover your entire transferred balance. You may need to move only a portion of your debt. 8. Effect on your credit score, short-term versus long-term. Short-term effects. A new inquiry from your credit card application can ding your score by a few points. A new account can lower the average age of your credit accounts. Long-term effects. Paying down your debt and lowering your credit utilization ratio helps your score recover and potentially improve. Maintaining on-time payments can boost your credit history. 9. Alternatives for those who don't qualify. If your score is too low for a great 0% offer, or you need an alternative. Personal loans. A fixed-rate personal loan may be easier to obtain and can still consolidate debt, though rates depend on your creditworthiness. Credit union offers. Credit unions sometimes extend promotional balance transfer rates to members at reduced fees, or lower APRs. Negotiate with existing creditors. If you have a good payment record, you could call your current card issuer and request a reduced interest rate. Sometimes they'll oblige to retain you as a customer. Secured credit cards, rare offers. A few secured cards might offer limited promotional rates. Though not as common, it's worth investigating if your credit score is below average. How often can I do a balance transfer? Technically, as often as you find approvals and promotions. However, opening multiple cards in a short time can hurt your credit score due to repeated hard inquiries. Frequent balance transfers can become costly if you're repeatedly paying 3 to 5% fees. My conclusions. A 0% interest balance transfer can be a highly effective strategy to tackle high-interest debt, especially if you have a good to excellent credit score. By taking advantage of the promotional period to aggressively pay down the principal, you can save hundreds or even thousands of dollars in interest. Just be mindful of the costs involved, like balance transfer fees, and have a clear plan to pay off or significantly reduce the balance before the promotional window closes.